Hey, welcome back to another earnings report. Today we get Nvidia earnings. Oh, but we get a whole host of other earnings as well. Today is going to be one of those days that we get a lot of Intel. So I'll put a little banner up that says earnings come out in 25 minutes. So if you are just now watching the replay, 25 minutes from now is when the Nvidia earnings will be out. We will have a lot of earnings though coming out starting within, frankly, the next 5 minutes. We're going to have a lot of earnings as we go into the close. I don't personally love playing earnings, but I love covering me some earnings. Although I do have some derivative plays that I think would do well, whether or not Nvidia performs or not. So we'll see, but those are options and otherwise on rate sensitives. But for now, what we're going to do is we're going to go ahead and pull up and prepare. We're going to get Crowdstrike on deck. We're going to have Nvidia on deck, but remember, Nvidia is later. They're about 120. Their earnings call is scheduled for... what do we got here? Their earnings call is scheduled for 2 p.m. So we'll cover the earnings call as well. After Crowdstrike, we'll have Salesforce. We'll have Affirm. Ooh, these are going to be some good ones. We got some good ones today. We'll get to see, hey, you know, what's going on? Are people keeping their services for... artificial intelligence-based software? My guess is yes. Honestly, if I had to go into this and somebody put a gun to my head and said, Kevin, is Nvidia going up or down? As much as I think we're going into recession, I think Nvidia will probably go up after this. The amount of cash that company generates is massive. The cash flow is massive. Yes, is growth going to slow down? Duh. But some of that may already be priced in. So, I don't know. You know, I think options volatility is pretty insane to where I don't think it necessarily makes sense to play the options unless you're expecting more than, I believe you have to expect more than a 10% move. Let me see here. I'll let you know what the implied volatility is. I know volatility has been really high today. We actually had quite a few moves there on Tesla today. We played in the stocks and psych group, played a bunch, and... this is, how should I put it? They were good. We played some good Tesla plays. So I'm kind of excited here to see what happens here. But let's listen in here for a moment while I get this situated.
To focus on how much this fallout is ultimately going to cost Crowdstrike. By the way, we're going to hear from Crowdstrike's CEO, George Kurtz, tomorrow night on Mad Money with Jim Cramer. Scott.
All right, Steve Kovac, thank you very much. Okay, Seema, you can take this wherever you want to.
Can you feel the excitement, Scott? We're about 20 minutes away from the biggest chipmaker reporting earnings, and Nvidia and the broader chip sector trading down right now. Two things we'll be looking for. I mean, you've been talking about it, a window into big tech's CapEx spend for 2025 and beyond. Mizuho writing that clients are struggling to get overly bullish on the stock without any guidance on just how much the hyperscalers plan to spend on the future, plus an updated timeline on when Nvidia expects Blackwell to be shipped out to customers, and how its gaming business is holding up. Options market predicting a 10% move in either direction. That's about a $300 billion swing, Scott. Stock trading at 125 and change.
All right, Seema, we'll see what happens, and we'll see you again soon. That's Seema Modi. Mike, back to you. I mean, VIX up a little bit today,
yeah.
To your point. I mean, market's a little bit on edge.
Yeah, just clenching up just a little bit. Again.
All right, got a little bit more situated. Do think it would be awesome to, frankly, just see the economy soft land. I don't really want a hard landing. You know, I'm afraid of that because I think it hurts startups, it hurts businesses, it makes everything a little bit harder. Implied volatility on Nvidia is 9.02, so it actually fell a little bit from a couple days ago when the anticipation was 9.35. So down a smidge there, but we'll get Hewlett-Packard. We'll actually have Victoria's Secret as well for whoever is playing the underwear brand. So something else I thought was cool when we were playing Tesla today. I think I played Tesla like 3 times today, and each of the times made some money. The last of the times I think was the best. The last, oh, it doesn't want to show up, bummer. But the last time, oh, we'll get the bell. We'll talk about it in just a moment. Let's get the bell.
A ton of air pockets and not a lot of volume.
All right, we'll see what happens in a few moments, obviously, with Nvidia. The bell's going to ring us red today, but there's a lot ahead. Don't go anywhere. Let's spend some overtime with Morgan and John.
It's time. Stocks pulling back in the regular session.
All right, there we go. Market has closed. We are now waiting for Affirm, Octa, 5 Below, HP, obviously Nvidia, and Victoria's Secret. Let me know in the chat if I've missed anything. I don't think I have. These are pretty big. I'm excited to cover these. And 20 minutes from now, we'll be covering Nvidia earnings. That'll be very, very fun. So stay tuned for that. We have, this morning, we had Abercrombie, we had Nordstrom. We'll be covering the rest of these earnings now as they come out. No earnings out just yet, waiting for it. But yeah, here it is. This is what I wanted to show. This was this morning, or actually it was sometime today. I sent a little trend alert. I'm like, oh, Tesla's about to reject on VWAP. So we went for a quick little day trade. I bought a put for 131 and sold it for 218. Quick little 66%. That was pretty cool. Anyway, if you want to see those, I played that trade 3 times. The first 2 times were profitable, though not as nice as the 66%. And then the third play was a nice 66%. So we just kind of kept going in on the ups and downs. It was fun. So if you want to see those, always make sure you're part of the Stocks and Site group. And you can learn a lot more over at meetkevin.com. We've got the Labor Day sale going on now. Okay, with that said, let's get into what we've got. Salesforce comes out. Q3 revenue miss. Salesforce misses on Q3 revenue, but Q2 beats. So Q2 beats. So it's up 3%. Q2 sales come in at $2.07 billion. Professional services beat at $561 versus $531. Q2 services revenue beat at $226 versus $221. And revenue for Q2 beat at $9.33 billion versus $9.23. The problem is that guide for Q3 coming in soft, not majorly soft, does come in at a miss at about 9.335. The expectation was 9.42. So a little bit of a miss there. And for the fiscal year revenue, they took a little bit of, let's see here. That's roughly in line with expectations, right there at about the midpoint. It also looks like President and CFO Amy Weaver to step down. The moment I saw that headline, I just saw this big green candlestick. So apparently they didn't like Amy. I guess markets at least didn't like her. So a miss on Q3, beat on Q2, and we've got a transition of the CFO. Octa comes in with a beat. Octa beats. Octa comes in with Q2 at 72. Oh, and it's down 8.85%. See, this is why I hate playing earnings. Anyway, Octa comes in with Q2, 72 cents versus 61 expected. That's a beat. Revenue comes in 646 versus 632. Forecast for Octa also comes in at a beat at $649 million midpoint. 637.6 was the expectation. So that's a beat on EPS. It's a beat on the estimates. 5 Below cuts fiscal year net sales forecast. That's nearly a 10% dip there in the 5 Below fiscal year forecast. Adjusted EPS in line with expectations. 5 Below Q2 EPS actually beat. And fiscal year sales also cut, just to reiterate that. All right, that's 5 Below, which is just ticker symbol 5. And that stock is up 90 basis points. Okay, so we've got Octa down 5.8. Salesforce dropping now. Octa now down about 4%. Salesforce dropping. Salesforce coming in with a margin beat. And let's see, fiscal year adjusted EPS also beats. So thinking a little bit higher margin, a little bit higher on EPS. No Affirm yet. We're waiting for Affirm. No Victoria's Secret. Nvidia comes out at 120. Waiting for Crowdstrike. Waiting for Affirm. Waiting for HP. And waiting for Victoria's Secret. 5 Below now up 7% all of a sudden. And this is despite the fact that they actually cut their fiscal year guide. It's crazy. Octa beats, it's down 3%, beats on current and beats on forecast. 5 Below misses and cuts guide, and it's up 5.7%, because after all, it all makes sense, right? No, it's not supposed to almost. Anyway, so you've got Tesla down to about $205. The Qs are sitting about $471. Tesla was down about $165 today. You had the Qs that were down about 1.13 today. If we look at the small caps, IWM, we're sitting down about 65 basis points. 5 below. Okay, next earnings should be out momentarily. We're looking for HP comes out at 4:15. We've got Affirm is supposed to be out at 4:05. That's right now. So Affirm should be out any moment now, along with Crowdstrike. Crowdstrike meets estimates. 963 versus the 958 Q2 revenue. Q2 adjusted EPS comes in at 104.97. Crowdstrike out and down. Not a surprise. It's like you beat, you go down. You miss, you go up. It just is insane. Anyway, waiting for Affirm. Affirm is supposed to be out this minute. They got about 10 seconds to go here. And still no Affirm. 5 below, still up about 7%. Here we go. Some more data coming out on Crowdstrike. Fiscal year revenue coming in lower than expected. So that's a revision down on Crowdstrike revenue. And Q3 revenue also lower than expected. And as they lower estimates, the stock is going up because earnings make sense. Still no Affirm. Waiting for HP. HP comes out in about 9 minutes. Affirm comes out whenever the hell it comes out. Given that, you know, you're in a place where right now Affirm is supposed to be out with results as of 1 minute ago, but they are not out yet. Oh dear lordy. All right, let's listen to CNBC cover while I wait for some of the new ones.
Cannot compare it to estimates quite yet. EPS is coming in at $1.04 adjusted, and revenue coming in at $964 million adjusted. Again, now shares have pared back a little bit, up about 3%. We're going to keep digging through this and see what they say about the IT outage, but I'll send things back over to you for now, John.
All right. Thank you, Steve Kovac. We'll look for more. Patrick Moorhead, to you on this one, and really looking at the overall enterprise landscape right now. There still seems to be a lot of uncertainty, but a special kind of uncertainty around a name like CrowdStrike that had that big outage that broadly affected so many customers. If we just put Nvidia to the side and look at what the enterprise itself is doing in this economic environment, how strong is demand? How stable?
Yeah, so right now, the downstream effects of AI or the opportunity for AI, it changed everything.
Just know CrowdStrike reduced their fiscal year adjusted EPS guide by 8.8%. That's a pretty good chunk down. And fiscal year revenue was revised down 3.895 divided by 3.95, about 2.5%. So minus 2.5% reduction in fiscal year revenue, and they expect that to be $3.895 billion at the midpoint, and the adjusted EPS they think will be 3.63 at midpoint. The reason we say at midpoint, by the way, is because you just give a range. Still no Affirm. Waiting for Affirm. And yeah, Q2. Keep in mind, Q2 did beat though, but Q2 beat slightly, and that revenue beat was 963.9 divided by 958.2, less than 1%. Be less than 1% on revenue. Okay, so that's CrowdStrike. We're now, remember, we're about 11 minutes away from Nvidia. I think that's just going to be what everybody's worried about. 5 below we cover. Still waiting for HP, Victoria's Secret, and we are waiting for... We got Salesforce, and of course Nvidia. Okay, still no Affirm. I'm somewhat surprised the firm's as late as it is, but whatever. So this is, we'll throw CrowdStrike up here. Now, let's take a quick reminder of what we had there at Salesforce. So Q2 sales beat, 207 divided by 201 is about a 3% beat for Q2 sales versus expectations. The adjusted EPS also beat. Q2, is Affirm out? No, I don't have Affirm yet. I'm waiting for it. Anyway, Q2 adjusted EPS for Salesforce comes in at 256. Let me see what that is. 256 divided by 2.35. It's about a 9% beat. Beat 9%. So like they did really well on Q2. You got to give them that. Okay, here we go. Affirm. Affirm beats. You were looking for 631.2 on Q1 revenue. They came in at wait, hold on. This is a forecast. This is messy. The estimate was 631. The guide is 655 for Q1. Okay, let's try to write that down. It's a little messy here. Affirm. So this is a, the midpoint here would be Q1 rev to be 655 mil. 655 divided by 631.9 puts me at about a 3.6% beat. 3.6% over expectations on Q1 revenue. And then I have Q1 merchandise volume. It's actually pretty good. Yeah, that's Q1 gross merchandise volume. I'm going to put that at 7.25 billion is the midpoint versus 7.18 billion expected. 7.25 divided by 7.18 puts me at about roughly a 1% beat. About 1% over expectations. I think Affirm's going to be up on this. Let's see. Affirm is up 12%. Look at the line. Line to line. It's always the line. We have a new thing now in the course member chat where even if I see a trend and I don't necessarily trade on it, if I see the trend, I'll send an alert like, hey, this is, about to hit VWAP and about to reject or break through, or, here's something that's going for this line, or, whatever. It's just mostly like line alerts, and they're manual. But anyway, Affirm Holdings Q4 rev. So that's actually not part of the forecast. That's part of the past. Q4 must be their calendar Q2. Q4 rev comes in at 659.2 million versus the estimate of, oh wow, that's a big beat. That's really good in terms of revenue there. That's 659.2 divided by 605.1. That's a 9% beat. 9% over expectations on other revenue. This is a very good report by Affirm here. Not a company you want to hold in a recession, but really good earnings right now here, and actually probably speaks well to the consumer and continued consumption, although it is borrowing, right? Speaks well to consumer, although this is borrowing. So obviously risky in a recession. Okay, Five Below. Five Below comes out with another update, just suggesting that Q2 comp sales are expected to be negative 5.7% versus 6.43% previously expected. So that's a little better. Five Below is up 11%, by the way. So fiscal year forecast for Five Below is that fiscal year net sales would come in at about 3.765 billion dollars versus the let's see, 3.83 billion expected. So at the midpoint, so slightly lower. But I think it's probably one of those things where it's like it's not as bad as feared. But anyway, you can see Affirm really riding high on that line here. We're 1 minute away, by the way, from HP. So let's see here. Affirm's up about 16%. That's pretty impressive. Crowdstrike's up about 3%. And then we have Five Below up about 12%. Wow. Five Below stock up about 12%. And then who else reported? Octa is down about 6. Stock down about 6. And then we have Salesforce, which is up about 4. Okay. HP should be out any moment. Victoria's Secret is not out yet. And let's see. Affirm expects to be profitable on a GAAP basis in Q4. Okay. What did they just report? See, I don't know what quarter they just reported. Affirm, Investor Relations. They just reported Q4. So are they saying Q4 of the next year? They must be saying that. Because I don't think they're profitable now. Financials. 8K. This is being formatted. Check back shortly. Oh, I don't know what the heck that means. Alright, whatever. Okay. So let's get HP. Okay, HP comes in with a revenue beat. So HP revenue beat. We have free cash flow misses. Cash flow misses slightly. And we do have a revenue beat for Q3 at 13.52 billion versus 13.37 billion as the estimate. That's funny, 13.37. Margin missed though. That's interesting. So adjusted EPS missed as well. Misses by 3 cents at 83 cents. And Q3 margin, this is the adjusted operating come on. Operating margin misses by, what would that be? 50 basis points at 8.1%. Then still sees fiscal year cash flow actually slightly higher than expected. Q4 adjusted EPS somewhat in range. Boosts buyback authorization as well. Oh, okay. So let's write that down. Boosts buyback by 10 bill. Buyback authorization. And for Q4, or I should say for the year, fiscal year cash flow estimate above estimates. Forecast. Fiscal year cash flow forecast. Pretty good. Not bad. Not bad. Okay, let's go. Wow, look at Affirm's now up 18%. Let's go with HPE. Oh, is it HPE or HPQ? Oh, it's HPQ. Okay. Down about 3.6%. Q's pretty stable. 5 below CRM. All these pretty stable. Let me go back to Octa. So just while we're 2 minutes away from Nvidia, by the way. Q2 EPS at Octa beat nicely, actually. They beat by 18% at 72 cents versus 61 cents expected. And then their forecast comes in at a beat for 649 divided by 637.6, about a 1.7% beat. Okay. So now we're going to be going on to Nvidia. This is obviously the big boy everyone's waiting for. So we'll cover that. And then we'll go through some of these reports, and we'll wait for the earnings call together. We'll go knock all that stuff out. Yep, there we go. Okay, good. So, let's see here. Is Nvidia out yet? Nope, Nvidia's not out yet. But we're going to watch for it here. Oh, look at that pop there on Nvidia. And the data's not even out yet. Oh, the volatility is going to be crazy. My guess, and I don't have a bet on it, but my guess is up. After, and it's not based on the fact that right now we see it sort of ticking up, but it's just sort of my guess in general. Because Nvidia, generally Nvidia always beats. And I think the only way it goes down is if they say something stupid on the earnings call. And I think they know that. So I don't think they're going to say anything stupid. But let's see what happens. All right, everyone. The Labor Day sale is going on for the courses on building your wealth. The link down below. Make sure to check those out. Make sure to subscribe.
Subscribe to Meet Kevin.
And if you have any questions, make sure to email us.
Email staff at meetkevin.com.
And even though we had a great option trade that was up 66% today.
Past performance does not guarantee, promise, or imply future returns.
Okay, data center revenue beats 26.3 versus 25. Margin comes in at 75.7 versus 75.5 expected. Revenue comes in at 30 billion. The estimate was 28.86. That's a 3.9% beat. These are good numbers, man. These are good numbers. Q3 revenue expected to be 32.5 billion. It's 8.3% up. That, let's see here. I don't know. I mean, I see the stock falling there, but that's actually pretty good. Q3 revenue expected to be up 8.3% at 32.5 billion. These numbers are pretty good. 32.5 billion. The current Q2 was 30 bill versus the 28.86 Wall Street was expecting, which is pretty good. 28.86 divided by 30 divided by 28.86. Yeah, that's a 3.9% beat. 3.9% beat. That's pretty good. They're approving an additional $50 billion in share buybacks. My gosh, gotta pump the stock, baby. Blackwell samples have started shipping. Okay, well, that's good. Blackwell samples have started shipping. That'll excite some people. Additional $50 billion share buyback authorized. That's very good, too. Oh, this is pretty good. Adjusted EPS comes in at 68 cents. 68 cents versus 64 cents expected. Maintains dividend at 1% per share. Dividend at 1 cent per share. Pretty good, pretty good. Let's see how the other ones are moving here. Tesla's still down about 43 bips on that. And the Qs are up about 10 bips. Not really seeing much movement there. Affirm's still doing very well. Okay, so the dividend's still there. Gaming actually beat expectations. That's a surprise. So Q2 gaming beats at 2.9 billion versus 2.79 billion expected. Data center revenue. Let's see. So, I mean, most of their money comes from data center revenue, right? So data center revenue comes in at 26.3 billion versus the estimate of 25.08. So that's still a beat. 26.3 divided by 25.08. It's about a 4.8% beat. 4.8%. Come on, baby. Beat. Okay, I guess I can get rid of that. There we go. So it's a beat. We expected them to beat. Their Q2 margin was good too. I'd like to get a little bit more on forecast, honestly. Q2 adjusted gross margin was 75.7% versus 75.5 expected, which is pretty good as well because you're maintaining onto that insane margin, which is really good. Remember, they're a chip designer, not a manufacturer. Blackwell production ramp is scheduled to begin in Q4. Okay, the stock's falling on that now. As soon as that came through, Blackwell production ramp scheduled to begin in Q4. Okay, market did not like that. Market liked the samples there, but Nvidia, let me actually get the doc if I can here for a sec. All right. Okay. So now we're gonna go get our doc. Is this their annual? Oh, they're falling now, huh? Down about 4.8%. I guess you can't satisfy the investor community. Is it? No, we should be getting Q2. So why it's not out yet? I don't see it on their website yet. All right, whatever. So we have the Q2 fiscal 25 call, and that's going to be out soon. Quarterly presentation. press release is not out yet. CFO commentary is out. Okay, we can look at that. We'll look at CFO commentary. And, oh my gosh. The stock's down a lot now. What's going on? Down about 7% now. Dude, what the hell's happening? Nvidia says changes are needed to improve Blackwell production. Oh no. I said going into Nvidia, I go, the one thing that could screw this up is bad news on Blackwell. Now, I actually thought we'd have good numbers here. We'd beat and it'd go up and everything would be fine. Ooh, but the one thing that could screw it up is that next growth cycle. Scheisse. So, oh, man. Okay, we're going to get a lot of details in, okay, now it's coming up again because Nvidia expects several $billion in Blackwell revenue in Q4. Nvidia, it says, Nvidia says changes needed to improve Blackwell production. Yeah, that's not great. Okay, so you're getting a little bit of a bounce now. Still expecting to recognize billions of dollars of revenue. I mean, I would hope so. Data center revenue is like 26 billion per quarter, so I hope you have billions of dollars of revenue in Q4. Keep in mind, their Q4 is, well, they just reported Q2 25, so they're exactly a year ahead, basically. Anyway, so still expects several $1 billion in Blackwell revenue in Q4, though. Okay. So we'll get some details. Whatever details they give us on the earnings call for this will dictate, I think, the direction of the stock tomorrow. Okay. Let's see. Okie dokie. Let's go through the doc and let's see what we got. Okay. So, here we go. We specialize in markets where computing platforms can provide tremendous acceleration applications. Yeah, we already know that. 10-for-1 forward stock split was completed on June 7th. Revenue was $30 billion, up over a double from a year ago, 15% sequentially. Still very good. Data center revenue was up 16% sequentially. It's also still pretty good. Strong Hopper GPU platform. Still strong demand. Cloud service providers represented roughly 45% of our data center revenue. That makes sense. More than 50% from consumer and internet or enterprise companies, so like a Google or Amazon. Okay. Customers continue to accelerate their Hopper architecture purchases while gearing up to adopt Blackwell. I mean, that sounds pretty good, honestly. If they're still buying this stuff, the old stuff, while they're waiting for Blackwell, fine. Network revenue up a lot from InfiniBand and Ethernet for AI. The InfiniBand network they have, I mean, it's just industry class. It's the best. Best in class, I should say. We shipped customers samples of our Blackwell architecture in the second quarter. We executed change to the Blackwell GPU mask to improve production yield. We executed a change to the Blackwell GPU mask to improve production yield. Blackwell production ramp is scheduled to begin in the fourth quarter and continue into fiscal 26. We expect to ship several $1 billion of Blackwell revenue. Hopper demand is strong and shipments are expected to increase still in the second half of next year. Okay. Automotive revenue was up 37% from a year ago and 5% sequentially. That's pretty good too. AI cockpit solutions. Remember, this is a competitor to Tesla, right? Tesla's FSD is not the only one out there. And in fact, I wouldn't be surprised if this actually could affect Tesla stock. This mention right here, and maybe Tesla stock falls on talk about how this is growing so well. This is just really showing you how much your competition is growing. Gross margins decreased sequentially due to low-yielding Blackwell material and a higher mix of new products. That's reasonable. It's because you're investing. That's fine. I mean, honestly, am I really worried about the balance sheet? No. They generate cash like crazy. Let's see here. Non-affiliated investments, public securities, blah, 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 blah. Okay. Well, we're about 30 minutes away from the earnings call. The stock's now stabilizing at about 3.5%. Remember, the stock was down about 2.1% on the day. Okay. Here you could see margins compared. So you could see that decline in margin right here. That might lead to some heart palpitations for some investors. People really like to see margin growth. So not ideal here. This is the first, I think this is probably one of the first like downs you've seen on margin. But it's okay. Like, you would expect that. That's totally reasonable. Honestly, the fact that graphics are going up again is kind of cool. So I really like that. I mean, I love the Nvidia chips. I'm, you know, running a 4680 right here. Is that what it's called? 40. Is it a no? 4680 is the battery. What? I don't know why I even said that. That's the Tesla battery. What are these called? 4960. What the hell? What do I have? Hold on. Device manager, display adapters, 4090. That's what it is. 4090. Goodness gracious. Too many numbers in this world. Good lord.
Yeah, I'm running a 4680 graphic card. Have you seen my new graphic card, everyone? It looks a lot like a can. Hello, everyone. If you want to see the inside of my graphics can, make sure to join the courses on building your wealth link down below at meetkevin.com. You get all my trade alerts, buy, sell trade alerts, or trend alerts that I see. Look at that graphics card. It's a new definition to the trash can. All right, so enough fooling around, you knucklehead. Get back to reading the damn reports. That's the only reason we watch you. We hate your guts, but we want you to read the reports for us.
Okay. So, automotive, this, I think people I really think people underestimate how much competition Nvidia could actually end up creating for Tesla. And I'm not trying to say that to be bearish. You know, I don't have a horse in the Nvidia or Tesla race really. But it's worth noting that this is essentially direct but future Tesla competition. The better Nvidia GPUs become, the more rapidly Tesla's moat may decline. I think that's a reasonable thing to say. You know, I know some people don't want to hear that, but how do I put a color on this? So, I don't want it to seem like it was something they wrote. There we go. All right, good. I should probably save my work because, you know, Adobe's pretty famous for crashing my stuff. Oh, are you kidding me? It crashed. Oh, Adobe, I hate you! You suck! You suck! Big ones! Damn. Alright, whatever. Okay, so, let me just see if there was anything else to see there. So dumb, Adobe. Okay. Let me save it first. Nvidia. Now I'll open it from my saved folder. God.
Probably gonna crash anyway.
Okay. I don't know that. I mean, we pretty much read all of this. Gaming revenue, higher sales, potentially because of the back-to-school season. Yeah, but you're lapping the year-over-year. Okay, I mean, this is all pretty reasonable, actually. So, the stock right now is only down about 3.5%. Let's now go... I want to look at Affirm, and I want to see what Affirm's saying, because, honestly, their numbers are pretty good. Pretty good, pretty good. So... gotta give the credit where the credit's due, as we like to say. Anyway, the Nvidia earnings call will begin at 2 p.m. Nvidia earnings call 2 p.m. So, oops, I spelled that wrong. in Nvidia earnings call 2 p.m. There we go. Let's go ahead and put that up. And then we're going to go look at Affirm just to distract us while we wait. Quickly, one quick little shout out pitch here. Today, just before, it's about Eastern time, probably around 1 o'clock, 1:14 Eastern time, somewhere around there. I'll show you what I did. I sent an alert that Tesla was bouncing off VWAP right here. And I want you to actually see it so you can believe me. And this is the kind of stuff that I send. And yeah, I sent it at, where is my trend alerts? Let's see. I gotta find my darn thing. Whatever. I'll just show you, I'll put the little day trade up here. So this is the last one that I did, and this is kind of how I send them. So you could see this was right around 1-ish, which is about 11 our time. No, sorry. What is this? This is 1. Where do we go here? We got in at... Okay, that was... I just want to see this. 10:18. 10:18 was when I traded. 10:18 was when I traded. And about here in this range was where we were talking about the trend alert. And the trade alert went through here at 10:18. And I just want you to see what it looks like for a moment. And then we're going to get into Affirm here. So this is kind of what it looks like. I put back in at 1:31. And about 26 minutes later, because the darn thing was tanking, as you can see here, a little bit later I posted... and I put what the contract is and what a screenshot of it. Then I go move limits up. I moved limits up to lock in profits. Then I sent another alert and said, move limits up, boys and girls, not financial advice. And then a few minutes later, about 4 minutes after that, I ended up closing the position. That was a 66% move. I like that one a lot. And I don't know what happened to my little trade alert here. But, let's see. But anyway, now we're doing not just actually the trade alerts, but also trend alerts, which I think are kind of cool. So, anyway. Okay, cool. So, next, we're going to go look at Affirm. And keep in mind, we got a Labor Day sale going on. If you have questions, you could always email us at staff@mekevin.com. Okay, so now I want to look at more data. So, Affirm. All right. So, we got, what do we have? It's 1337 now. Yay, 1337. And we're going to be jumping over to Affirm just in the meantime while we wait. This is going to be the Affirm press release. And this is... Let's see here. Let's see. Their numbers were very good. So I'm going to give them credit. Still down about 3.35% there on Nvidia. And Affirm, look at where Affirm's sitting, 35.73. So there you go. Okay, good. Okay, so then we go, here we go, Affirm. Okay, so Affirm. I just want to see the numbers. Here we go. Okay, so key operating metrics, gross merchandise volume, what do we have here? In billions, 7.2. It's a pretty good year-over-year growth. I'm going to type that in here. Let's see here. Somebody said that. Dirt. Oh, yeah, I did have dirt in my hair, huh? Yeah, oh, it's a plant. I had a plant in my hair. That's funny. Yeah. Hit a tree. Okay, so 7.2 divided by 5.5. 30% year over year. That's pretty good. So let's throw that in here. We have 7.2 divided by 5.5. 30.9% growth. I like that. And again, I still see this as risky in a recession. There we go. Let's fix that. Okay. Risky in recession. We know that. Total revenue net 659. Total revenue as a percentage of gross merchandise. How did they increase this? Now that's pretty impressive. So they're making more money on each loan. Is that because they're taking riskier loans? Oh, Nvidia is back up to about 1.3. It's trying to rise here. Why more rev as percent? I'm going to write down, did risk go up? All right. So let's throw that here. Okay. Operating loss. Still losing money, but by Q4, they suggest by Q4 they may go profitable. That's great. Good for them. Then we have... You're losing a lot less money. Already. Already losing a lot less money than previously. I mean, you're losing a fraction. That's like a fourth of the loss. Okay. Let's see here. Cash and cash equivs. That's pretty good. 1 bill of cash plus restricted cash. So call it about 1.4-ish cash equiv. Loans held for sale. Securities available at fair value. That's fine. Most of that is borrowed, though, is my understanding. We now have notes issued, funding debt. Yeah, that's about 5 billion. Convertible, 6.3. About 6.3 plus payables. 3 billion plus payables and debt. Plenty of cash for payables. And the only real concern would be that in a recession, that these guys right here, this is your recession risk right here, right? Because the debt's not going to go down. Recession risk. If there's no recession, I'm not worried so much about those. And I want to look at their cash flow statement. Cash flow. We have, oh gosh. Net cash and operating was positive because they're adding back the stock base and the provision for losses. Right. So loss provisions, I don't see a big move up here. Loss provisions are up 23%. Increase in loss provision, which is less than their total volume growth. Seems positive. Right? I think I would agree that this seems a little positive, right? If you're taking less losses against the loans, or you're putting aside less, that you're more bullish sort of on the underlying strength. So that's pretty good. Okay. So let's go here. What do we got? Okay. Hold on a sec. So, okay, let me see. I want to see if Doomberg has anything interesting going on quickly. And then I think Bostic was supposed to talk today too. But, well, let me listen to them just for a second.
In a recession, if we are not in a recession, that they can still take some time to get back to, levels closer to what they estimate is neutral, knowing those estimates are uncertain. So I think that's what they're thinking they're going to do. I do think, when you bring in the distribution of risks here, I think that also matters. The fact that, as Powell suggested, just upside inflation risks have moderated, and there are signals within the labor market report, within the labor markets, that do suggest that labor markets have eased quite a bit. And obviously, usually those things have momentum that builds on each other. At least they have had historically. So when you see an unemployment rate that moves up over 50 basis points, that tends to result in a bigger move up in the unemployment rate. So within that balance of risks, we would still argue the Fed has some room here, to start cutting interest rates, see how the economy responds, and then revise their level or their estimate of neutral.
Big Lots to consider bankruptcy. Wow, that's wild. Walmart's taking all the dollar hollers. Okay, let me see. I want to see. I thought Bostic was talking today too, but I didn't see any headlines on him at all. So I don't know if he was just boring. Yeah, there's nothing. Nothing on Bostic. Bostic. Nope. Okay. I mean, maybe he's talking later, but whatever. Okay, so the Nvidia call is in 13 minutes. Let me see. I want to go to income and expenses here on Affirm while we're in it. Make sure this is saved. Oh, yeah. Let's save this really quickly. Why does it keep wanting to overwrite? 1 second. There you go. All right. Let's go to income. That's right here. So let's see where the dollars are coming from. So card network revenue is up 42.98 divided by 34, up about 26%, and merchandise network revenue is up 28%. Got it. Okay, so this one's growing more. Servicing, gain on sale of loans. Oh, now that's interesting. That's a little bit of a boost there. Not much. I mean, 69 million, but almost 2x loans sold from last year. Maybe trying hard to get to profitable. That could be. See, and that's what makes me nervous about them, mind you. Them keeping most of their loans makes me recession nervous. Like if they just sold all their loans, whatever, But again, provision for credit loss hasn't moved much. Loss provision growing slower though, which is good. Sales and marketing actually declined. Wow, less S&M. Actually, honestly, like their SG&A just down. Processing, I mean, technology over here as well. All like SG&A and tech down. Good for them. Okay. So they're trying to run the company more efficiently. Implies they're running the company more efficiently. Oh my gosh, I can't. There. Okay, so. Yeah. I don't mind that. I mean, there's still a money-losing company. And a lot of recession risk. It's the last place I really want to be. But not bad. That's some of their highlights over here. But I don't know that. I generally don't like reading the highlights. I like just getting into the actual stuff. Here is their guide. All right. Somebody says there's too much background noise. Sorry about that. I was digging, and so I cranked the ACs. I'll put those back to normal for you. So there, that noise should be quieter now. I can't hear. So hopefully that wasn't too loud. I haven't really been paying too much attention here to the chat. Sorry about that. Okay. All right. Yeah, everybody looks relatively happy. Okay, fine. So, just quick shout out to Steve, Alexander, Jason, Lenny, Imran, Ahmed, Slim, Slim, that's cool, Jordan, Lonel, John, Paul. Thank you so much for joining the courses on building your wealth over at meetkevin.com. Okay, so Nvidia's now down 4.25. Tesla's down about 1%. The Qs are down about 0.6. And you've got stable yields. That'll change if the market actually tanks. And Bitcoin's still sitting at 59. Okay, got it. All right. So let's look at this forecast quickly here. Operating margin. Yeah, they are becoming more efficient. That's the same thing we saw earlier. So this is good. Okay. I like that. Let's see here. Eric Krüger. Worth buying the courses for the live streams. Oh, thank you. Yeah, I really like our course member lives. I think we do a lot of cool analysis and Q&A and brainstorming. I don't think anybody really does that. Gabriel Green says great courses. Oh, thank you for that. CPAC, Kevin is for other people. Thanks. Okay, so okay, issues from shares. That's fine. That's probably for the stock comp. That's fine. Fiscal year 2025 gross merchandise volume is expected to be consistent with 2024, with the second and fourth quarter showing elevated volumes. All right. Ha, that's cool. I'll put a little check mark in here. I like that. Ah, frankly, pretty good. Pretty good. Make sure that's saved. And let's see what else we should look at. Nvidia earnings call in about 6 minutes. So obviously we'll go to that. And let me see this really quickly. Oh, that's so lame. That failed to fire. Okay, well, that's lame. All right, let's listen in over here for a moment.
Trading at Schwab.
Oh, never mind. All right, let me just send this really quick. Okay, I'll delete that. There we go. That's fixed. Okay. All right. So, what else? Let's see if there's any analysis yet. 5 below, no changes. Oh, I want to write down some takeaways there. So, Affirm. I'm going to say see stable gross merchandise volumes next year. Margin to improve, and they're taking lower loss reserves as a percentage of growth. That was good. Nvidia, I'll make a couple more notes over here. Nvidia, gaming back to year-over-year growth. What else did we see at Nvidia? Oh, the automotive. Yeah, let's write that one down. Just some of the things that we wrote down before I lost that file here. I'll just do this so we could do it together here. So this was that file. I just need a new PDF program on PC. See, this doesn't happen on my Mac. So I wanted to mention this. The sequential margin decline from 78.4% to 75.1% was expected. We did see, I like that the automotive was great. Automotive risk for Tesla up 5% Q on Q and 37% year on year. Okay, we hit that. We're going to get a lot more detail here on Blackwell in just a moment. It's not annotated. It's a little harder for me to remember what we talked about. Cash flow is excellent. Talked about this. Inventory was 81 days. We could talk about the cloud service providers. What percentage came from them? That was over here. This section right here. So 45% of data center revenue, which data center revenue represents 26 divided by 30 over 85% of Nvidia revenue comes from data center sales. Data center revenue comes from CSPs, cloud service providers. There we go. Okay. They still expect Hopper sales. I think that's wild. It's actually a good thing. Still expect strong year-on-year growth. Wait, no, that's from last. Okay, sequential growth in customers continue to accelerate. There we go. This was the line right here. This was a really good one. That one. Customers continue to accelerate their Hopper architecture purchases while gearing up for Blackwell. Gearing up to adopt Blackwell. There we go. Okay. Get a Dell. Okie dokie. Alright, well, the call should begin in about a minute. So let's go ahead and get ready for that call. NVIDIA Industrial Relations. Welcome, Harry. Harry just joined the Stocks and Psych group. Welcome aboard, Harry. Yeah, we just started the Labor Day sale. So it's gonna be a 3-day weekend. I actually won't be posting a lot because I'll be gone for Labor Day, but whatever. Webcast. Oh yeah. All right. We're in. Earnings call is up. Oh gosh, sorry. That was loud and obnoxious and annoying. My bad. Oopsies. I didn't ever see Victoria's Secret. Oh, I don't really care either. Okay, still got music going on here. Yeah, the 210 is almost at parity, isn't it? Steve says I should have referral credits for the courses. That's true. Yeah, we should have that going again.
Good afternoon. My name is Abby, and I will be your conference operator today. At this time, I would like to welcome everyone to NVIDIA's second quarter earnings call. All lines have been placed on mute to prevent any background noise. After the speaker's remarks, there will be a question and answer session. If you would like to ask a question during that time, simply press the star key followed by the number 1 on your telephone keypad. If you would like to withdraw your question, press star 1 a second time. Thank you. And Mr. Stuart Stecker, you may begin your conference.
Thank you. Good afternoon, everyone, and welcome to NVIDIA's conference call for the second quarter of fiscal 2025. With me today from NVIDIA are Jensen Huang, President and Chief Executive Officer, and Colette Kress, Executive Vice President and Chief Financial Officer. I would like to remind you that our call is being webcast live on NVIDIA's Investor Relations website. The webcast will be available for replay until the conference call to discuss our financial results for the third quarter of fiscal 2025. The content of today's call is NVIDIA's property. It cannot be reproduced or transcribed without prior written consent. Oopsie. During this call, we may make forward-looking statements based on current expectations. These are subject to a number of risks, significant risks, and uncertainties, and our actual results may differ materially. For a discussion of factors that could affect our future financial results and business, please refer to the disclosure in today's earnings release, our most recent forms 10-K and 10-Q, and the reports that we may file on Form 8-K with the Securities and Exchange Commission. All our statements are made as of today, August 28, 2024, based on information currently available to us. Except as required by law, we assume no obligation to update any such statements. During this call, we will discuss non-GAAP financial measures. You can find a reconciliation of these non-GAAP financial measures to GAAP financial measures in our CFO commentary, which is posted on our website. Let me highlight an upcoming event for the financial community. We will be attending the Goldman Sachs Communacopia and Technology Conference on September 11th in San Francisco, where Jensen will participate in a keynote fireside chat. Our earnings call to discuss the results of our third quarter of fiscal 2025 is scheduled for Wednesday, November 20th, 2024. With that, let me turn the call over to Colette.
Thanks, Stuart. Q2 was another record quarter. Revenue of $30 billion was up 15% sequentially and up 122% year on year, and well above our outlook of $28 billion. Starting with data center. Data center revenue of $26.3 billion was a record, up 16% sequentially and up 154% year-over-year, driven by strong demand for NVIDIA Hopper GPU computing and their networking platforms. Compute revenue grew more than 2.5x. Networking revenue grew more than 2x from the last year. Cloud service providers represented roughly 45% of our data center revenue, and more than 50% stemmed from the consumer, internet, and enterprise companies. Customers continue to accelerate their Hopper architecture purchases while gearing up to adopt Blackwell. Key workloads driving our data center growth include generative AI, model training and inferencing, video, image, and text data, pre- and post-processing with CUDA and AI workloads, synthetic data generation, AI-powered recommender systems, SQL and vector database processing as well. Next-generation models will require 10 to 20 times more compute to train with significantly more data. The trend is expected to continue. Over the trailing 4 quarters, we estimate that inference drove more than 40% of our data center revenue. CSPs, consumer internet companies, and enterprises benefit from the incredible throughput and efficiency of NVIDIA's inference platform. Demand for NVIDIA is coming from frontier model makers, consumer internet services, and tens of thousands of companies and startups building generative AI applications for consumers, advertising, education, enterprise and healthcare, and robotics. Developers desire a rich ecosystem and availability in every cloud. CSPs appreciate the broad adoption of NVIDIA and are growing their NVIDIA capacity given the high demand. NVIDIA H200 platform began ramping in Q2, shipping to large CSPs, consumer internet, and enterprise companies. The NVIDIA H200 builds upon the strength of our Hopper architecture and offering over 40% more memory bandwidth compared to the H100. Our data center revenue in China grew sequentially in Q2 and is a significant contributor to our data center revenue. As a percentage of total data center revenue, it remains below levels seen prior to the imposition of export controls. We continue to expect the China market to be very competitive going forward. The latest round of MLPerf inference benchmarks highlighted NVIDIA's inference leadership with both NVIDIA Hopper and Blackwell platforms combining to win gold medals on all tests. At Computex,
NVIDIA is down 5% right now.
Top computer manufacturers unveiled an array of Blackwell architecture-powered systems and NVIDIA networking for building AI factories and data centers. With the NVIDIA MGX modular reference architecture, our OEMs and ODM partners are building more than 100 Blackwell-based systems designed quickly and cost-effectively. The NVIDIA Blackwell platform brings together multiple GPU, CPU, DPU, NVLink switch, and the networking chips, systems, and NVIDIA CUDA software to power the next generation of AI across the cases, industries, and countries. The NVIDIA GB200 NVL72 system with the 5th generation NVLink enables all 72 GPUs to act as a single GPU and deliver up to 30 times faster inference for LLMs workloads and unlocking the ability to run trillion parameter models in real time. Hopper demand is strong and Blackwell is widely sampling. We executed a change to the Blackwell GPU mass to improve production yields. Blackwell production ramp is scheduled to begin in the fourth quarter and continue into fiscal year 26. In Q4, we expect to ship several $billion in Blackwell revenue. Hopper shipments are expected to increase in the second half of fiscal 2025. Hopper supply and availability have improved. Demand for Blackwell platforms is well above supply, and we expect this to continue into next year. Networking revenue increased 16% sequentially. Our Ethernet for AI revenue, which includes our Spectrum-X end-to-end Ethernet platform, doubled sequentially with hundreds of customers adopting our Ethernet offerings. Spectrum-X has broad market support from OEM and ODM partners and is being adopted by CSPs, GPU cloud providers, and enterprise.
By the way, I just asked GPT, and GPT says changing the production mask takes a lot of time. Kind of interesting, because that's what they talked about with Blackwell. They're changing the mask, which is for lithography. I don't know. I usually don't like to just use GPT for that, but I did for this.
Performance of traditional Ethernet. We plan to launch new Spectrum-X products every year to support demand for scaling compute clusters from tens of thousands of GPUs today to millions of GPUs in the near future. Spectrum-X is well on track to begin a multi-billion-dollar product line within a year. Our sovereign AI opportunities continue to expand as countries recognize AI expertise and infrastructure at national imperatives for their society and industries. Japan's National Institute of Advanced Industrial Science and Technology is building its AI Bridging Cloud Infrastructure 3.0 supercomputer with NVIDIA. We believe sovereign AI revenue will reach low double-digit billions this year. The enterprise AI wave is started. Enterprises also drove sequential revenue growth in the quarter. We are working with most of the Fortune 100 companies on AI initiatives across industries and geographies. A range of applications are fueling our growth, including AI-powered chatbots, generative AI copilots, and agents to build new monetizable business applications and enhance employee productivity. Amdocs is using NVIDIA generative AI for their smart agent, transforming the customer experience and reducing customer service costs by 30%. ServiceNow is using NVIDIA for its Now Assist offering, the fastest growing new product in the company's history. SAP is using NVIDIA to build Joule copilots. Cohesity is using NVIDIA to build their generative AI agent and lower generative AI development costs. Snowflake serves over 3 billion queries a day for over 10,000 enterprise customers, is working with NVIDIA to build copilots. And lastly, Wistron is using NVIDIA AI Omniverse to reduce end-to-end cycle times for their factories by 50%. Automotive was a key growth driver for the quarter, as every automaker developing autonomous vehicle technology is using NVIDIA in their data centers. Automotive will drive multi-billion dollars in revenue across on-prem and cloud consumption, and will grow as next generation AV models require significantly more compute. Healthcare is also on its way to being a multi-billion dollar business as AI revolutionizes medical imaging, surgical robots, patient care, electronic health record processing, and drug discovery. During the quarter, we announced a new NVIDIA AI Foundry service to supercharge generative AI for the world's enterprises with Meta's Llama 3.1 collection of models. This marks a watershed moment for enterprise AI. Companies, for the first time, can leverage the capabilities of an open source frontier level model to develop customized AI applications to encode their institutional knowledge into an AI flywheel to automate and accelerate their business. Accenture is the first to adopt the new service to build custom Llama 3.1 models for both its own use and to assist clients seeking to deploy generative AI applications. NVIDIA NIMs accelerate and simplify model deployment. Companies across healthcare, energy, financial services, retail, transportation, and telecommunications are adopting NIMs, including Aramco, Lowe's, and Uber. AT&T realized 70% cost savings and 8 times latency reduction after moving into NIMs for generative AI, call transcription, and classification. Over 150 partners are embedding NIMs across every layer of the AI ecosystem. We announced NIM Agent Blueprints, a catalog of customizable reference applications that include a full suite of software for building and deploying enterprise generative AI applications. With NIM Agent Blueprints, enterprises can refine their AI applications over time, creating a data-driven AI flywheel. The first NIM Agent Blueprints include workloads for customer service, computer-aided drug discovery, and enterprise retrieval augmented generation. Our system integrators, technology solution providers, and system builders are bringing NVIDIA NIM Agent Blueprints to enterprises. NVIDIA NIM and NIM Agent Blueprints are available through the NVIDIA AI Enterprise Software Platform, which has great momentum. We expect our software, SaaS, and support revenue to approach a $2 billion annual run rate exiting this year, with NVIDIA AI Enterprise notably contributing to growth. Moving to gaming and AI PCs. Gaming revenue of $2.88 billion increased 9% sequentially and 16% year on year. We saw sequential growth in console, notebook, and desktop revenue, and demand is strong and growing, and channel inventory remains healthy. Every PC with RTX is an AI PC. RTX PCs can deliver up to 1,300 AI TOPS, and there are now over 200 RTX AI laptops designed from leading PC manufacturers. With 600 AI-powered applications and games and an installed base of 100 million devices, RTX is set to revolutionize consumer experiences with generative AI. NVIDIA ACE, a suite of generative AI technologies, is available for RTX AI PCs. Mega Break is the first game to use NVIDIA ACE, including our small language model, Minitron 4B, optimized on device inference. The NVIDIA gaming ecosystem continues to grow. Recently added RTX and DLSS titles include Indiana Jones and the Great Circle, Dune Awakening, and Dragon Age, the Veilguard. The GeForce Now library continues to expand with total catalog size of over 2,000 titles, the most content of any cloud gaming service.
I just tweeted, Jensen signing the tit was the tip. Inspired by you, Steve. Thank you.
And 20% year on year. Demand is being driven by AI and graphic use cases, including model fine-tuning and Omniverse-related workloads. Automotive and manufacturing were among the key industry verticals driving growth this quarter. Companies are racing to digitalize workflows to drive efficiency across their operations. The world's largest electronics manufacturer, Foxconn, is using NVIDIA Omniverse to power digital twins of the physical plants that produce NVIDIA Blackwell systems. And several large global enterprises, including Mercedes-Benz, signed multi-year contracts for NVIDIA Omniverse Cloud to build industrial digital twins of factories. We announced new NVIDIA USD NIMs and connectors to open Omniverse to new industries and enable developers to incorporate generative AI copilots and agents into USD workflows, accelerating their ability to build highly accurate virtual worlds. WPP is implementing USD NIM microservices in its generative AI-enabled content creation pipeline for customers, such as the Coca-Cola Company. Moving to automotive and robotics, revenue was $346 million, up 5% sequentially and up 37% year-on-year. Year-on-year growth was driven by the new customer ramps in self-driving platforms and increased demand for AI cockpit solutions. At the Computer Vision and Pattern Recognition Conference, NVIDIA won the Autonomous Grand Challenge in the end-to-end driving at scale category, outperforming more than 400 entries worldwide. Boston Dynamics, BYD Electronics, Figure, Intrinsic, Siemens, Skilled AI, and Teradyne Robotics are using the NVIDIA Isaac robotics platform for autonomous robot arms, humanoids, and mobile robots. Now moving to the rest of the P&L. GAAP gross margins were 75.1% and non-GAAP gross margins were 75.7%, down sequentially due to a higher mix of new products within data center and inventory provisions for low-yielding Blackwell material. Sequentially, GAAP and non-GAAP operating expenses were up 12%, primarily reflecting higher compensation-related costs. Cash flow from operations was $14.5 billion. In Q2, we utilized cash of $7.4 billion toward shareholder returns in the form of share repurchases and cash dividends, reflecting the increase in dividend per share. Our board of directors recently approved a $50 billion share repurchase authorization to add to our remaining $7.5 billion of authorization at the end of Q2. Let me turn the outlook for the third quarter. Total revenue is expected to be $32.5 billion, plus or minus 2%. Our third quarter revenue outlook incorporates continued growth of our Hopper architecture and sampling of our Blackwell products. We expect Blackwell production ramp in Q4. GAAP and non-GAAP gross margins are expected to be 74.4% and 75% respectively, plus or minus 50 basis points. As our data center mix continues to shift to new products, we expect this trend to continue into the fourth quarter of fiscal 2025. For the full year, we expect gross margins to be in the mid-70% range. GAAP and non-GAAP operating expenses are expected to be approximately $4.3 billion and $3.0 billion, respectively. Full-year operating expenses are expected to grow in the mid to upper 40% range as we work on developing our next generation of products. GAAP and non-GAAP other income and expenses are expected to be about $350 million, including gains and losses from non-affiliated investments and publicly held equity securities. GAAP and non-GAAP tax rates are expected to be 17%, plus or minus 1%, excluding any discrete items. Further financial details are included in the CFO commentary and other information available on our IR website. We are now going to open the call for questions. Operator, would you please help us?
Wow, no Jensen?
Thank you. And at this time, I would like to remind everyone, in order to ask a question, press star and then the number 1 on your telephone keypad. We will pause for just a moment to compile the Q&A roster. And as a reminder, we ask that you please limit yourself to 1 question.
Lame.
And your first question comes from the line of Vivek Arya with Bank of America Securities. Your line is open.
Thanks for taking my question. Jensen, you mentioned in the prepared comments that there's a change in the Blackwell GPU mask.
Yep, the most important question.
Other incremental changes in back-end packaging or anything else? And I think related, you suggested that you could ship several $1 billion of Blackwell in Q4 despite a change in the design. Is it because all these issues will be solved by then? Just help us size what is the overall impact of any changes in Blackwell timing, what that means to your kind of revenue profile, and how are customers reacting to it?
Yeah, thanks, Vivek. The change to the mask is complete.
Oh, this sounds like Jensen.
Functional.
That's good news.
Is necessary. And so we're sampling functional samples of Blackwell, Grace Blackwell, in a variety of system configurations as we speak. There are something like 100 different types of Blackwell-based systems that are built that were shown at Computext. And we're enabling our ecosystem to start sampling those. The functionality of Blackwell is as it is, and we expect to start production in Q4.
And your next question comes from the line of Toshiya Hari with Goldman Sachs. Your line is open.
Hi, thank you so much for taking the question. Jensen, I had a relatively longer-term question. As you may know, there's a pretty heated debate in the market on your customers and customers' return on investment, and what that means for the sustainability of CapEx going forward. Internally at NVIDIA, like what are you guys watching? What's on your dashboard as you try to gauge customer return and how that impacts CapEx? And then a quick follow-up maybe for Colette. I think your sovereign AI number for the full year went up maybe a couple billion. What's driving the improved outlook, and how should we think about fiscal 26? Thank you.
Thanks, Toshiya. First of all, when I said ship production in Q4, I mean shipping out. I don't mean starting to ship, but I don't mean starting production, but shipping out. On the longer term question, let's take a step back. And you've heard me say that we're going through 2 simultaneous platform transitions at the same time. The first one is transitioning from accelerated computing from general purpose computing to accelerated computing. And the reason for that is because CPU scaling has been known to be slowing for some time, and it is slow to a crawl. And yet the amount of computing demand continues to grow quite significantly. You could
maybe even estimated to be doubling every single year. And so if we don't have a new approach, computing inflation would be driving up the cost for every company, and it would be driving up the energy consumption of data centers around the world. In fact, you're seeing that. And so the answer is accelerated computing. We know that accelerated computing, of course, speeds up applications. It also enables you to do computing at a much larger scale, for example, scientific simulations or database processing. But what that translates directly to is lower cost and lower energy consumed. And in fact, this week, there's a blog that came out that talked about a whole bunch of new libraries that we offer. And that's really the core of the first platform transition, going from general purpose computing to accelerated computing. And it's not unusual to see someone save 90% of their computing cost. And the reason for that is, of course, you just sped up an application 50x. You would expect the computing cost to decline quite significantly. The second was enabled by accelerated computing because we drove down the cost of training large language models or training deep learning so incredibly that it is now possible to have gigantic scale models, multi-trillion parameter models, and pre-train it on just about the world's knowledge corpus, and let the model go figure out how to understand human language representation and how to codify knowledge into its neural networks and how to learn reasoning. And so which caused the generative AI revolution. Now, generative AI, taking a step back about why it is that we went so deeply into it, is because it's not just a feature, it's not just a capability, it's a fundamental new way of doing software. Instead of human engineered algorithms, we now have data. We tell the AI, we tell the model, we tell the computer
this is getting very boring.
What are our previous observations? And then for it to figure out what the algorithm is, what's the function. It learns a universal, AI is a bit of a universal function approximator, and it learns the function. And so you could learn the function of almost anything, and anything that you have that's predictable, anything that has structure, anything that that you have previous examples of. And so now here we are with generative AI. It's a fundamental new form of computer science. It's affecting how every layer of computing is done, from CPU to GPU, from human engineered algorithms to machine learned algorithms, and the type of applications you could now develop and produce is fundamentally remarkable. And there are several things that are happening in generative AI. So the first thing that's happening is the frontier models are growing in quite substantial scale. And we're still all seeing the benefits of scaling. And whenever you double the size of a model, you also have to more than double the size of the data set to go train it. And so the amount of flops necessary in order to create that model goes up quadratically. And so it's not unusual, it's not unexpected to see that the next generation models could take 10, 20, 40 times more compute than last generation. So we have to continue to drive the generational performance up quite significantly so we can drive down the energy consumed and drive down the cost necessary to do it. So the first one is there are larger frontier models trained on more modalities, and surprisingly, there are more frontier model makers than last year. And so you have more on more on more. That's one of the dynamics going on in generative AI. The second is, although it's below the tip of the iceberg, what we see are ChatGPT, image generators. We see coding. We use generative AI for coding quite extensively here at NVIDIA now. We, of course, have a lot of digital designers and things like that. But those are kind of the tip of the iceberg. What's below the iceberg are the largest systems, largest computing systems in the world today, which are, and you've heard me talk about this in the past, which are recommender systems moving from CPUs. It's now moving from CPUs to generative AI. So recommender systems, ad generation, custom ad generation, targeting ads at very large scale and quite hyper targeting, search and user generated content. These are all very large scale applications have now evolved to generative AI. Of course, the number of generative AI startups is generating tens of billions of dollars of cloud renting opportunities for our cloud partners, and sovereign AI. Countries that are now realizing that their data is their natural and national resource, and they have to use AI, build their own AI infrastructure so that they could have their own digital intelligence. Enterprise AI, as Colette mentioned earlier, is starting, and you might have seen our announcement that the world's leading IT companies are joining us to take the NVIDIA AI Enterprise platform to the world's enterprises. The companies that we're talking to, so many of them are just so incredibly excited to drive more productivity out of their company, and then general robotics. The big transformation last year as we are able to now learn physical AI from watching video and human demonstration and synthetic data generation, from reinforcement learning from systems like Omniverse. We're now able to work with just about every robotics companies now to start building general robotics. And so you can see that there are just so many different directions that generative AI is going. And so we're actually seeing the momentum of generative AI accelerating.
And Toshiya, to answer your question regarding sovereign AI and our goals in terms of growth, in terms of revenue, it certainly is a unique and growing opportunity, something that surfaced with generative AI and the desires of countries around the world to have their own generative AI that would be able to incorporate their own language, incorporate their own culture, incorporate their own data in that country. So more and more excitement around these models and what they can be specific for those countries. So yes, we are seeing some growth opportunity in front of us.
And your next question comes from the line of Joe Moore with Morgan Stanley. Your line is open.
Great, thank you. Jensen, in the press release, you talked about Blackwell anticipation being incredible, but it seems like Hopper demand is also really strong. I mean, you're guiding for a very strong quarter without Blackwell in October. So, how long do you see sort of coexisting strong demand for both? And can you talk about the transition to Blackwell? Do you see people intermixing clusters? Do you think most of the Blackwell activity is new clusters? Just some sense of what that transition looks like.
Yeah, thanks, Joe. The demand for Hopper is really strong. And it's true, the demand for Blackwell is incredible. There's a couple of reasons for that. The first reason is if you just look at the world's cloud service providers and the amount of GPU capacity they have available, it's basically none. And the reason for that is because they're either being deployed internally for accelerating their own workloads, data processing, for example. Data processing, we hardly ever talk about it because it's mundane. It's not very cool because it doesn't generate a picture or generate words. But almost every single company in the world processes data in the background, and NVIDIA's GPUs are the only accelerators on the planet that process and accelerate data, SQL data, Pandas data science toolkits like Pandas, and the new one, Polars. These are the most popular data processing platforms in the world. And aside from CPUs, which, as I've mentioned before, really running out of steam, NVIDIA's accelerated computing is really the only way to get boosting performance out of that. And so that's number one, is the number one use case long before generative AI came along is the migration of applications one after another to accelerated computing. The second is, of course, the rentals. They're renting capacity to model makers, they're renting it to startup companies. And a generative AI company spends the vast majority of their invested capital into infrastructure so that they could use an AI to help them create products. And so these companies need it now. They just simply can't afford, you just raised money, they want you to put it to use now. You have processing that you have to do. You can't do it next year, you got to do it today. And so there's a fair, that's one reason. The second reason for Hopper demand right now is because of the race to the next plateau. The first person to the next plateau gets to be, gets to introduce a revolutionary level of AI. The second person who gets there is incrementally, better or about the same. And so the ability to systematically and consistently race to the next plateau and be the first one there is how you establish leadership. NVIDIA is constantly doing that, and we show that to the world in the GPUs we make and the AI factories that we make, the networking systems that we make, the SoCs we create. I mean, we want to set the pace. We want to be consistently the world's best, and that's the reason why we drive ourselves so hard. Of course, we also want to see our dreams come true, and all of the capabilities that we imagine in the future and the benefits that we can bring to society. We want to see all that come true, and so these model makers are the same. They're of course they want to be the world's best. They want to be the world's first, and although Blackwell will start shipping out in billions of dollars at the end of this year, the standing up of the capacity is still probably weeks and a month or so away. And so between now and then is a lot of generative AI market dynamic. And so everybody is just really in a hurry. It's either operational reasons that they need it. They need accelerated computing. They don't want to build any more general purpose computing infrastructure. And even Hopper, of course, H200 is state of the art. Hopper, if you have a choice between building CPU infrastructure right now for business or Hopper infrastructure for business right now, that decision is relatively clear. And so I think people are just clamoring to transition the $1 trillion of established installed infrastructure to a modern infrastructure, and Hopper is state of the art.
And your next question comes from the line of Matt Ramsey with TD Cowen. Your line is open.
Thank you very much. Good afternoon, everybody. Jensen, I wanted to kind of circle back to an earlier question about the debate that investors are having about, the ROI on all of this CapEx. And hopefully this question and the distinction will make some sense. But what I'm having discussions about is with the percentage of folks that you see that are spending all of this money and looking to sort of push the frontier towards AGI convergence and, as you just said, a new plateau in capability. And they're going to spend regardless to get to that level of capability because it opens up so many doors for the industry and for their company versus customers that are really, really focused today on CapEx versus ROI. I don't know if that distinction makes sense. I'm just trying to get a sense of how you're seeing the priorities of people that are putting the dollars in the ground on this new technology and what their priorities are and their time frames are for that investment. Thanks.
Thanks, Matt. The people who are investing in NVIDIA infrastructure are getting returns on it right away. It's the best ROI computing infrastructure investment you can make today. And so one way to think through it, probably the easiest way to think through it is just go back to first principles. You have $1 trillion worth of general purpose computing infrastructure. And the question is, do you want to build more of that or not? And for every $1 billion worth of general purpose CPU-based infrastructure that you stand up, you probably rent it for less than $1 billion. And so, because it's commoditized, there's already $1 trillion on the ground. What's the point of getting more? And so the people who are clamoring to get this infrastructure, one, when they build out Hopper-based infrastructure and soon Blackwell-based infrastructure, they start saving money. That's tremendous return on investment. And the reason why they start saving money is because data processing saves money. Data processing is probably just a giant part of it already. And so recommender systems save money, so on and so forth, okay? And so you start saving money. The second thing is everything you stand up are going to get rented because so many companies are being founded to create generative AI. And so your capacity gets rented right away. And the return on investment of that is really good. And then the third reason is your own business. You want to either create the next frontier yourself or your own internet services benefit from a next generation ad system or a next generation recommender system or a next generation search system. So for your own services, for your own stores, for your own user generated content, social media platforms, for your own services, generative AI is also a fast ROI. And so there's a lot of ways you could think through it, but at the core, it's because it is the best computing infrastructure you could put in the ground today. The world of general purpose computing is shifting to accelerated computing. The world of human engineered software is moving to generative AI software. If you were to build infrastructure to modernize your cloud and your data centers, build it with accelerated computing NVIDIA. That's the best way to do it.
And your next question comes from the line of Timothy Arcuri with UBS. Your line is open.
Thanks a lot. I had a question on the shape of the revenue growth, both near and longer term. I know, Colette, you did increase OpEx for the year, and if I look at the increase in your purchase commitments and your supply obligations, that's also quite bullish. On the other hand, there's some school of thought that not that many customers really seem ready for liquid cooling, and I do recognize that some of these racks can be air cooled. But Jensen, is that something to consider, sort of on the shape of how Blackwell is going to ramp? And then I guess when you look beyond next year, which is obviously going to be a great year, and you look into 26, do you worry about any other gating factors like, say, the power supply chain, or at some point models start to get smaller? I'm just wondering if you can speak to that. Thanks.
I'm going to work backwards. I really appreciate the question, Tim. So remember, the world is moving from general purpose computing to accelerated computing. And the world builds about $1 trillion worth of data centers. $1 trillion worth of data centers in a few years will be all accelerated computing. In the past, no GPUs are in data centers, just CPUs. In the future, every single data center will have GPUs. And the reason for that is very clear, because we need to accelerate workloads so that we can continue to be sustainable, continue to drive down the cost of computing, so that when we do more computing, we don't experience computing inflation. Second, we need GPUs for a new computing model called generative AI that we can all acknowledge is going to be quite transformative to the future of computing. And so I think working backwards, the way to think about that is the next $1 trillion of the world's infrastructure will clearly be different than the last trillion, and it'll be vastly accelerated. With respect to the shape of our ramp, we offer multiple configurations of Blackwell. Blackwell comes in either a Blackwell Classic, if you will, that uses the HGX form factor that we pioneered with Volta, and I think it was Volta. And so we've been shipping the HGX form factor for some time. It is air cooled. The Grace Blackwell is liquid cooled. However, the number of data centers that want to go liquid cooled is quite significant. And the reason for that is because we can, in a liquid cooled data center, in any data center, power limited data center, whatever size data center you choose, you could install and deploy anywhere from 3 to 5 times the AI throughput compared to the past. And so liquid cooling is cheaper. Liquid cooling, our TCO is better, and liquid cooling allows you to have the benefit of this capability we call NVLink, which allows us to expand it to 72 Grace Blackwell packages, which has essentially 144 GPUs. And so imagine 144 GPUs connected in NVLink, and that we're increasingly showing you the benefits of that. And the next click is obviously very low latency, very high throughput, large language model inference. And the large NVLink domain is going to be a game changer for that. And so I think people are very comfortable deploying both. And so almost every CSP we're working with are deploying some of both. And so I'm pretty confident that we'll ramp it up just fine. Your second question out of the third is looking forward. Yeah, next year is going to be a great year. We expect to grow our data center business quite significantly next year. Blackwell is going to be a complete game changer for the industry, and Blackwell is going to carry into the following year. And as I mentioned earlier, working backwards from first principles. Remember that computing is going through 2 platform transitions at the same time, and that's just really, really important to keep your head on, your mind focused on, which is general purpose computing is shifting to accelerated computing, and human engineered software is going to transition to generative AI or artificial intelligence learned software. Okay.
And your next question comes from the line of Stacy Raskin with Bernstein Research. Your line is open.
Hi, guys. Thanks for taking my questions. I have 2 short questions for Colette. The first, several $1 billion of Blackwell revenue in Q4. Is that additive? You said you expected Hopper demand to strengthen in the second half. Does that mean Hopper strengthens Q3 to Q4 as well on top of Blackwell adding several $1 billion? And the second question on gross margins, if I have mid-70s for the year, depending where I want to draw that, if I have 75 for the year, I'd be something like 71 to 72 for Q4, somewhere in that range. Is that the kind of exit rate for gross margins that you're expecting? And how should we think about the drivers of gross margin evolution into next year as Blackwell ramps? And I mean, hopefully, I guess the yields and the inventory reserves and everything come up.
Yes, so Stacey, let's first take your question that you had about Hopper and Blackwell. So we believe our Hopper will continue to grow into the second half. We have many new products for Hopper, our existing products for Hopper, that we believe will start continuing to ramp in the next quarters, including our Q3 and those new products moving to Q4. So let's say Hopper therefore versus H1 is a growth opportunity for that. Additionally, we have the Blackwell on top of that, and the Blackwell starting of ramping in Q4. So hope that helps you on those 2 pieces. Your second piece is in terms of on our gross margin. We provided gross margin for our Q3. We provided our gross margin on a non-GAAP at about 75. We'll work with all the different transitions that we're going through, but we do believe we can do that 75 in Q3. We provided that we're still on track for the full year, also in the mid-70s or approximately the 75. So we're going to see some slight difference possibly in Q4, again, with our transitions and the different cost structures that we have on our new product introductions. However, I'm not in the same number that you are there. We don't have exactly guidance, but I do believe you're lower than where we are.
And your next question comes from the line of Ben Reitzes with Melius. Your line is open.
Market didn't love that one.
Yeah, hey,
Thanks a lot for the question, Jensen and Colette. I wanted to ask about the geographies. There was the 10Q that came out, and the United States was down sequentially, while several Asian geographies were up a lot sequentially. Just wondering what the dynamics are there. Obviously China did very well. You mentioned it in your remarks. What are the puts and takes? And then I just wanted to clarify from Stacy's question if that means the sequential overall revenue growth rates for the company accelerate in the fourth quarter, given all those favorable revenue dynamics. Thanks.
Let me talk about a bit in terms of our disclosure in terms of the 10Q. A required disclosure in a choice of geographies. Very challenging sometimes to create that right disclosure, as we have to come up with one key piece. Pieces in terms of in terms of who we sell to and or specifically who we invoice to. And so what you're seeing in terms of there is who we invoice. That's not necessarily where the product will eventually be and where it may even travel to the end customer. These are just moving to our OEMs, our ODMs, and our system integrators for the most part across our product portfolio. So what you're seeing there is sometimes just a swift shift in terms of who they are using to complete their full configuration before those things are going into the data center, going into notebooks and those pieces of it. And that shift happens from time to time. But yes, our China number there, our invoicing to China, keep in mind that is incorporating both gaming, also data center, also automotive in those numbers that we have. Going back to your statement in regarding gross margin and also what we're seeing in terms of what we're looking at for Hopper and Blackwell in terms of revenue. Hopper will continue to grow in the second half. Will continue to grow from what we are currently seeing. During determining that exact mix in each Q3 and Q4, we don't have here. We are not here to guide yet in terms of Q4. But we do see right now the demand expectations. We do see the visibility that will be a growth opportunity in Q4. On top of that, we will have our Blackwell architecture.
And your next question comes from the line of C.J. Muse with Cantor Fitzgerald. Your line is open.
Yeah, good afternoon. Thank you for taking the question. You've embarked on a remarkable annual product cadence with challenges only likely becoming more and more given rising complexity in a reticle limit advanced package world. So curious, if you take a step back, how does this backdrop alter your thinking around potentially greater vertical integration, supply chain partnerships, and then thinking through consequential impact to your margin profile? Thank you.
Yeah, thanks. Let's see. I think the answer to your first question is that the reason why our velocity is so high is simultaneously because the complexity of the model is growing, and we want to continue to drive its cost down. It's growing, so we want to continue to increase its scale. And we believe that by continuing to scale the AI models, that will reach a level of extraordinary usefulness, and that it would open up, realize the next industrial revolution. We believe it, and so we're going to drive ourselves really hard to continue to go up that scale. We have the ability, fairly uniquely, to integrate, to design an AI factory because we have all the parts. It's not possible to come up with a new AI factory every year unless you have all the parts. And so we have next year, we're going to ship a lot more CPUs than we've ever had in the history of our company. More GPUs, of course, but also NVLink switches, CX DPUs, ConnectX CPU for East and West, Bluefield DPUs for North and South, and data and storage processing, to InfiniBand for supercomputing centers, to Ethernet, which is a brand new product for us, which is well on its way to becoming a multi-billion-dollar business to bring AI to Ethernet. And so the fact that we could build, we have access to all of this. We have one architectural stack, as you know. It allows us to introduce new capabilities to the market, as we complete it. Otherwise, what happens is you ship these parts, you go find customers to sell it to, and then somebody's got to build up an AI factory. And the AI factory's got a mountain of software. And so it's not about who integrates it. We love the fact that our supply chain is disintegrated in the sense that we could service, Quanta, Foxconn, HP, Dell, Lenovo, Supermicro. We used to be able to service ZT. They were recently purchased, and so on and so forth. And so the number of ecosystem partners that we have, Gigabyte, Asus, the number of ecosystem partners that we have, that allows them to take our architecture, which all works, but integrated in a bespoke way into all of the world's cloud service providers, enterprise data centers. The scale and reach necessary from our ODMs and our integrator supply chain is vast and gigantic because the world is huge. And so that part we don't want to do, and we're not good at doing. And but we know how to design the AI infrastructure, provide it the way that customers will like it, and lets the ecosystem integrate it. So anyways, that's the reason why.
And your final question comes from the line of Aaron Rakers with Wells Fargo. Your line is open.
Yes, thanks for taking the question. I wanted to go back into the Blackwell product cycle. One of the questions that we tend to get asked is how you see the rack scale system mix dynamic as you think about leveraging NVLink, you think about GB, NVL72, and how that go-to-market, dynamic looks, as far as the Blackwell product cycle. I guess, put distinctly, how do you see that mix of rack scale systems as we start to think about the Blackwell cycle playing out?
Yeah, Aaron, thanks. The Blackwell rack system, it's designed and architected as a rack, but it's sold in disaggregated system components. We don't sell the whole rack. And the reason for that is because everybody's rack's a little different, surprisingly. Some of them are OCP.
Everyone's rack's a little different.
Enterprise. And the power limits for everybody could be a little different. Choice of CDUs, the choice of power bus bars, the configuration and integration into people's data centers, all different. And so the way we designed it, we architected the whole rack. The software is going to work perfectly across the whole rack. And then we provide the system components. Like, for example, the CPU and GPU compute board is then integrated into an MGX. It's a modular system architecture. MGX is completely ingenious. And we have MGX ODMs and integrators and OEMs all over the planet. And so just about, any configuration you would like, where you would like that 3,000-pound rack to be delivered, it's got to be
a large
close
one.
It has to be integrated and assembled close to the data center because it's fairly heavy. And so everything from the supply chain, from the moment that we ship the GPU, CPUs, the switches, the NICs, from that point forward, the integration is done quite close to the location of the CSPs and the locations of the data centers. And so you can imagine how many data centers in the world there are and how many logistics hubs we've scaled out to with our ODM partners. And so I think that because we show it as one rack, and because it's always rendered that way and shown that way, we might have left the impression that we're doing the integration. Our customers hate that we do integration. The supply chain hates us doing integration. They want to do the integration. That's their value added. There's a final design in, if you will. It's not quite as simple as shimmy into a data center, but that design fit in is really complicated. And so the design fit in, the installation, the bring up, the repair and replace, that entire cycle is done all over the world. And we have a sprawling network of ODM and OEM partners that does this incredibly well. So integration is not the reason why we're doing racks. It's the anti-reason of doing it. The way we don't want to be an integrator, we want to be a technology provider.
And I will now turn the call back over to Jensen Huang for closing remarks.
Thank you. Let me make a couple of comments that I made earlier again. That data center worldwide are in full steam to modernize the entire computing stack with accelerated computing and generative AI. Hopper demand remains strong, and the anticipation for Blackwell is incredible. Let me highlight the top 5 things. The top 5 things of our company. Accelerated computing has reached a tipping point. CPU scaling slows. Developers must accelerate everything possible. Accelerated computing starts with CUDA-X libraries. New libraries open new markets for NVIDIA. We released many new libraries, including CUDA-accelerated Polars, Pandas, and Spark, the leading data science and data processing libraries. cuVS for vector databases. This is incredibly hot right now. Ariel and Shiona for 5G wireless base station. A whole world of data centers that we can go into now. Parabricks for gene sequencing, and AlphaFold 2 for protein structure prediction is now CUDA accelerated. We are at the beginning of our journey to modernize $1 trillion worth of data centers from general purpose computing to accelerated computing. That's number 1. Number 2, Blackwell is a step function leap over Hopper. Blackwell is an AI infrastructure platform, not just a GPU. Also happens to be the name of our GPU, but it's an AI infrastructure platform. As we reveal more of Blackwell and sample systems to our partners and customers, the extent of Blackwell's leap becomes clear. The Blackwell vision took nearly 5 years and 7 one-of-a-kind chips to realize. The Grace CPU, the Blackwell dual GPU in a CoWoS package, ConnectX DPU for east-west traffic, Bluefield DPU for north-south and storage traffic, NVLink switch for all-to-all GPU communications, and Quantum and Spectrum X for both InfiniBand and Ethernet can support the massive burst traffic of AI. Blackwell AI factories are building-sized computers. NVIDIA designed and optimized the Blackwell platform full stack, end-to-end, from chips, systems, networking, even structured cables, power and cooling, and mountains of software to make it fast for customers to build AI factories. These are very capital-intensive infrastructures. Customers want to deploy it as soon as they get their hands on the equipment and deliver the best performance and TCO. Blackwell provides 3 to 5 times more AI throughput in a power-limited data center than Hopper. The third is NVLink. This is a very big deal. With its all-to-all GPU switch is game-changing. The Blackwell system lets us connect 144 GPUs in 72 GB200 packages into one NVLink domain, with an aggregate NVLink bandwidth of 259 terabytes per second in one rack. Just put that in perspective, that's about 10 times higher than Hopper. 259 terabytes per second kind of makes sense because you need to boost the training of multi-trillion parameter models on trillions of tokens. And so that natural amount of data needs to be moved around from GPU to GPU. For inference, NVLink is vital for low latency, high throughput, large language model token generation. We now have 3 networking platforms: NVLink for GPU scale up, Quantum InfiniBand for supercomputing and dedicated AI factories, and Spectrum X for AI on Ethernet. NVIDIA's networking footprint is much bigger than before. Generative AI momentum is accelerating. Generative AI frontier model makers are racing to scale to the next AI plateau to increase model safety and IQ. We're also scaling to understand more modalities from text, images, and video to 3D, physics, chemistry, and biology. Chatbots, coding AIs, and image generators are growing fast, but it's just the tip of the iceberg. Internet services are deploying generative AI for large-scale recommenders, ad targeting, and search systems. AI startups are consuming tens of billions of dollars yearly of CSP's cloud capacity, and countries are recognizing the importance of AI and investing in sovereign AI infrastructure. And NVIDIA AI and NVIDIA Omniverse is opening up the next era of AI, general robotics. And now the enterprise AI wave has started, and we're poised to help companies transform their businesses. The NVIDIA AI Enterprise Platform consists of NeMo, NIMs, NIM Agent Blueprints, and AI Foundry that our ecosystem partners, the world-leading IT companies, use to help companies customize AI models and build bespoke AI applications. Enterprises can then deploy on NVIDIA AI Enterprise Runtime. And at $4,500 per GPU per year, NVIDIA AI Enterprise is an exceptional value for deploying AI anywhere. And for NVIDIA's software TAM can be significant as the CUDA-compatible GPU installed base grows from millions to tens of millions. And as Colette mentioned, NVIDIA software will exit the year at a $2 billion run rate. Thank you all for joining us today.
And ladies and gentlemen, this concludes today's call, and we thank you for your participation.
Summary time. Let's do a summary. Stock's slightly recovering here. Let's talk about it. All right, here we go. Hey everyone, welcome to a summary of what the heck just happened at Nvidia. Let's start with the obvious. Jensen signing the tit was the tip. But in the meantime, we should get into some of the risk factors and some of the good things about Nvidia because quite frankly, the earnings were actually pretty dang good. I actually think the market mostly overreacted when it sold off Nvidia 4.5% before the earnings call started and sold it down all the way to 8%, as much as 8%, when the earnings call was over. However, we did get some AI news today outside of Nvidia that could help us understand what the future of Nvidia might look like. And I call it a software consolidation risk. Let me give you an example after I first explain what I mean. If businesses fail because AI helps businesses defeat their competitors, those competitors are gone, and then you have less of a need from certain businesses to have software or otherwise. That's option one. Or option number two is fewer people are doing jobs because of AI, leading to a reduction in the amount of licenses or SaaS seats, we like to call them, that you have because of AI. Now, an example. Klarna has 5,000 employees, and in an article in Fortune today, the CEO and co-founder thought that they could get their employee count from 5,000 at peak down to 2,000. Now, they're a buy now, pay later company like Affirm, and they think they can go from 5,000 to 2,000, not by firing people, but just by no longer hiring people because they're just going to use AI. They literally said their AI chatbot that they made in collaboration with OpenAI does the work of about 700 customer service agents. Now, obviously, this is really, really good, right? But AI might end up giving us the winner of some in terms of a scenario or what we end up getting, right? Where companies, in my opinion, like Amazon and Walmart, or in this case, Klarna, they can win big because they can do things a lot more efficiently. But because they can do things a lot more efficiently, you actually have those companies spending a lot less money maybe on other products and services. Like something that was in Seeking Alpha today, also about Klarna, where they said, thanks to AI, we're able to consolidate, create a more lightweight tech stack, and stop using both Workday and Salesforce. So in other words, you have AI helping Klarna make more money, but they're also cutting out a bunch of AI, like other software that they don't need anymore because of AI. So AI, in some regard, is helping the companies using AI or helping the people use AI, but could end up leading to fewer people with jobs, fewer software companies getting or competing, well, I guess more software companies competing for fewer dollars, basically. And of course, if you have less people in seats, then you need less licenses anyway. So it's really interesting because it's kind of like, who exactly is going to win? Well, at least at the moment, the biggest winner has been Nvidia, because after all, they design chips and their valuation is actually relatively reasonable as long as you assume that this AI factory is going to keep growing. See, remember, they talk about this all the time, that, oh, hey, you know, we're the we're creating the AI factories, and there's $1 trillion opportunity to build out all these new GPU-powered AI infrastructure servers, data centers, whatever. But the problem is, and Jensen somewhat touched on it in the earnings call, is like, hey, you know, once the $1 trillion AI data center is up and running, what do we got to do from there? And his argument is, we got to get even more efficient and have even better chips. But wait a minute. The market actually sold off after he made that comment, because I think people were starting to go, yeah, that's a good point. Like, once we have the $1 trillion AI factory open, even if it's open with H100s, 200s, or whatever, do we really need Blackwell version 10? Of course, over time, we sort of slowly stair-step up in quality and efficiency. But there is also this potential risk that the big boost is what we've already seen. That's what created the hype and momentum. And if that growth rate slows, then people sell the stock. Because again, I think if the growth rate stays, I think the valuation is actually not horribly unreasonable. The valuation right now sits somewhere at about a 1.45 peg. A 1.75 peg. That's based on a PE ratio of 45 and a 25.6 expected growth rate. One sec. There we go. Just make sure somebody's got that. Okay, cool. Sorry. Anyway, so in other words, Wall Street consensus is that Nvidia is going to grow at 25.6% over the next 3 years. At a 45 PE now, it's only got a peg of 175. And right now, they're growing at about 8% per quarter, 8.3% per quarter. The benefit of 8.3% per quarter is you're actually growing at 33% annualized. So you're growing above that Wall Street consensus for the next 3 years. Where the concern comes in is what happens when that starts slowing down. Because now, let's link that to what I said at the beginning. If businesses are bankrupting other businesses, now those bankrupt businesses don't end up using software. If businesses are like, we don't need to hire more people, we're actually going to use less software and not more because the quality of software has gotten better because of AI, we might not even need $1 trillion software stack or infrastructure stack. Maybe we only need a $500 billion infrastructure stack because that's good enough. We don't need more AI. I don't know. But I'm trying to put together what markets might be thinking here, right? Because in my opinion, these earnings were actually pretty good. You're growing at a faster annualized growth rate on the quarter than markets are expecting for consensus going forward. The numbers that came out, in my opinion, were actually pretty dang good. Let's go through some of those. Q3 revenue is expected to be at $32.5 billion. We almost always beat that. Consensus today was just a little over $28.86 billion. We beat that with 30. We had a 3.9% beat there. Blackwell samples have already started shipping, and the mask update that they're doing, the lithography mask, that update has already been completed. That could be a time-consuming process, but they've already done that. So they're going to continue to ramp Blackwell in Q4 and next year. They don't expect to provide any guidance on Q4, but in terms of their Q3 guide, they're still expecting good growth. Their EPS beat, their gaming sector beat, their adjusted gross margin, while it came down from the levels we saw last quarter, is still amazing. 75.7% as, basically a company that just designs chips. Because remember, they don't manufacture chips, they design chips. It's pretty crazy. This is all actually pretty good. And there's one section that I really want to hit on that I think is really important because it also affects stocks like Tesla, and I want to hit on that one. Do you just quickly want to mention, if you want my trend alerts, stock alerts, and access to course member live streams and the lectures on building your wealth, we've got a Labor Day sale going on. We just had a sweet 66% return on the last option trade I made of the day. This is actually the third time that I entered and exited this particular contract, and this particular contract was profitable each time I entered it. And the last one was up 66%, which was pretty cool. And then check this out. Have you ever seen one of these? I'm probably going to get demonetized for this. This is actually a semi-shotgun. I'm going to try one of those out soon. I'm going to have to make a video on it. But it's a semi-shotgun built on an AR-15 frame. It's kind of crazy. I don't know why I'm talking about that. But anyway, Labor Day sales over at meetkevin.com. Check it out. Okay, so the risk for Tesla is that you do still see this automotive expansion, 5% quarter on quarter, 37% year over year. It's a little bit of a slowdown, given that that means you're at 20% annualized right now on automotive growth. And they're talking about, obviously, other, OEMs, car manufacturers, or whatever, basically trying to create their own FSD, if you will, whether it's Mercedes or Ford or whomever. And Nvidia sort of provides that platform for them to be able to do that. Worth keeping an eye on that. As far as some of the comments that we got from the earnings call and some other details, they talk about the opportunities not only in automotive, but in healthcare, in medical imagery, drug discovery, health record processing, imagine insurance processing. Every PC with RTX is an AI PC. Honestly, I wrote next to that I'm AI exhausted. I'm a little exhausted by the same explanation over and over again from Jensen explaining how transformative AI is. I mean, if it's going to lose a lot of people jobs and make software better and higher quality and bankrupt a bunch of businesses, I guess on one hand that's good for better software, but it's bad for all those people losing their jobs. But I guess that's just creative destruction, I suppose. Talk about liquid cooling. Liquid cooling got a big shout out here. Hopper will continue to grow in the second half, Jensen believes. Q4, no guide yet. The complexity of AI is growing. Blackwell rack is sold in parts. That's because everyone's rack is a little different. It's a word-for-word quote from him. Our customers don't want us to do integration, blah, blah, blah. This is basically, they don't want to rob like a Supermicro from building the racks or otherwise. The stock initially sold off when there was a remark about changes needed to improve Blackwell production. But again, they already finished that. They made the modifications to the chip mask, and it seems to be fine now. 45% of data center revenue comes from cloud service providers. That represents over 85% of Nvidia's revenue, data center sales. And, I have to say, these numbers are really good. The cash flow is great. They boosted their buyback authorization by $50 billion. Their valuation's fair. Everything about Nvidia is fantastic. It's a great company. By all respects, this company should be up, not down, the 6.4% it's down right now. But, the stock market isn't always rational. The stock market has to price in election risk. The stock market has to price in that we're about to uninvert in the yield curve, which could be the start of recession. The stock market has to price in recession. The stock market also has to price in rotating between something like, mega caps and then potentially going over to small caps. Who knows? Maybe we're going to be at small caps at some point here, absent a recession. I personally don't want to be in small caps because I am worried about a recession. Earlier, for example, we went through Affirm. Affirm absolutely killed it. They're lowering their expenses. They're increasing their bottom line. They expect to be profitable by the end of the year. They're able to grow their business at 30% while reducing expenses and taking lower loss reserves on their loans that they're making, which they hold a lot of on their books. It's all really good. Except in a recession. You go in a recession, those loans lose a lot more money than you expect. A firm goes bankrupt, maybe not. And then obviously AI investment slows down, especially if software companies start getting burned, like, whatever it might be. It could be, Salesforce getting burned or Snowflake getting burned or whatever. We'll see. But anyway, that's my take. Overall, great job, NVIDIA. Love the company. I'm just not a buyer right now because
Well, mostly recession. Recession and momentum. I think momentum has topped, and when Jensen signed the tit, it was the tip. Anyway, check out the Labor Day sale over at meetkevin.com. Thank you so very much for being here, and folks, we'll see you in the next one. Goodbye and good luck. Disclaimer time. Even though I'm a licensed financial advisor, real estate broker, and becoming a stockbroker, this video is neither personalized financial advice nor real estate advice for you. It is not tax, legal, or otherwise personalized advice tailored to you. This video provides generalized perspective, information, and commentary. Any third-party content I show should not be deemed endorsed by me. This video is not and shall never be deemed reasonably sufficient information for the purpose of evaluating a security or investment decision. Any links or promoted products are either paid affiliations or products or services which we may benefit from. I personally operate and actively manage the ETF and hold long positions in various securities, potentially including those mentioned in this video. However, I have no relationship to any issuers other than HouseHack, nor am I presently acting as a market maker.